Hello and welcome to yet another video of Investing Master Series that has been going for last 7 years, 7 days, and I hope you are enjoying that. How has been your experience in past 7 days? Do let me know in the chat box, comment box. And from this video on, we are gonna deep dive into one asset class which is equities. Right, the most fascinating part. I know probably you might be thinking, "Oh, Ahmed, this is what I've been waiting for last 7 days." But it was very much necessary for me to create the base to give you the fundamental clarity. Like if I directly start with equity or with fundamental analysis, you will uh, you wouldn't have get the perfection, you wouldn't have got the idea about non correlation, diversification, all that, which are very crucial as you being an investor. So if you agree with me, just type in agree, and let's jump in today's video. It's all about equities. So what is the characteristics of equity? Equities are generally known as shares, are very potential and powerful tools of wealth creation. Right? I'm gonna conduct this video and this series on as if absolute beginner can understood. Can understand. That's what I've been trying since the video number one, that an absolute beginner should also be able to understand what I'm trying to tell. Fair enough. Equities or shares are very, very, very powerful tool for wealth creation because typically you're building a business. Understand that when you are understand investing in equities, basically you are building a business. I'll tell you how in just a minute, few minutes time. So if right shares are bought at right prices and held for longer period, can create magic with the power of compounding. And I've already created a video on power of compounding. I'm sure you would have gone through that. Okay, one request at this point of stage I would like to make you is, if you've not gone through the earlier parts of this investing mastery series and you directly come to this video looking at the title, looking at the thumbnail, that okay, equity, something of my interest, please my dear, you missed the gold mine if you've not watched previous videos. Previous videos were absolute pure gold. And those of you, my friends, who have gone through all the 7 videos of past, tell me in the chat box, was those videos pure gold? Type in pure gold in the chat box if you really think so that my new friends, beginner friends can look at your comment, look at your chats, and go through all those videos, which will really help them to take mature decisions as far as investing is concerned. So, at the same time, it carries a risk. So when we say that it's a powerful tool of wealth creation, you also got to be keeping this thing in mind, that it carries a risk along with it, and risk of not only not getting good return or something, it even carries the risk of wiping out all of your capital, right? Like if you don't invest in the right share, if you don't invest in the right company, you don't follow diversification criteria, which I've discussed earlier, it can take away your whole of capital. Well, going to the next point, why equities? It gives you ownership rights in the best business in the world. This is very critical. Like if you got the shares in Reliance, though you can be having one share, though you can be having 10 shares, though you can be having 100 shares, but you are proportionate owner of Reliance Industries Limited to the extent of shares held by you. Isn't it something really super powerful? Type in powerful in the chat box. This is something real powerful. It gives you the ownership right in that business. Like if Reliance grows, if Reliance revenue grows, what will happen? But naturally, the share prices will grow. If share prices will grow, your wealth, your investment value will grow. So typically, in line with the growth in business, your wealth is also growing. That's really simply super powerful. With your investment in shares of good companies, why you should go into equities? This is a one more, very good scientific and not in fact scientific, but a psychological reason that when you are investing into shares of good companies, they companies see what is the basic fund of equity. Say for example, a promoter has got a good idea. He needs 100 crore capital. He doesn't have it, so he issues equity share. You, me, all the retailers invest small. Like you invest 1,000, I invest 5,000, somebody invest 1 lakh, somebody invest 10 lakh. That's how that 100 crore fund is accumulated. That business is started. Now, when the business gets started, the very first thing it gives is it provides employment. So, my dear, when you are investing into equities, you are directly or indirectly providing employments. You are the giver. Awesome. Congratulations to you if you are already an equity investor. If you are already an equity investor, I want you guys to type congratulations for yourself. Good products that company produces uplift the societies. Like see how much wealth has been created by some of the wonderful, beautiful companies in India. Like look at Tata Group, look at Infosys, look at Wipro. They have created abundance wealth for all the stakeholders, for its promoters, for its shareholders, for its employees. It's amazing, right? Look at TCS, and these are just few names. There are hundreds and thousands of good companies listed in Indian Stock Exchange which have literally uplifted the society by their products, by the way of employment, by the way of equity contribution, and not only that. Recently, through the recent amendment is Companies Act, now all listed companies must mandatorily do some CSR, that is corporate social responsibility. So they are donating, they are doing the charity, they are doing all the good work. So, my dear, kudos to you, congratulations to you. If you are investing into equity, you are part of the great work that is being done by all the companies. And like like look at Azim Premji Foundation, like look at Reliance Foundation. So many children are getting education by the wealth that has been created by Reliance. So hundreds and thousands of people are getting educations by the CSR initiatives of so many companies. Like Unilever has got CSR initiatives. In fact, every company either they do their own initiatives or they donate to somewhere. So this is what you're bringing to the society, my dear. If people like you, I'm telling, if your people like you do not invest in equities, this kind of greater companies can never be built, and all the benefit that we and you are reaping because of all these good companies can never happen to society. So you are a big, big, big contributor, and always be proud for what you're giving, what you're creating, what kind of wealth you're generating for the employee, for stakeholder. You are indirectly part of that, and you should always be proud of that. If you're literally proud about that, type I am proud in the chat box. Or you can type proud of me, right? You can grow your wealth as well as companies' wealth. So it's a win-win situation when you invest in equities. So you can invest in equity either directly. If you have good knowledge, you can go for it directly, or you can go for the equity mutual funds. Now, to generate wealth and enjoy the power of compounding, you need to create an edge in the market. Now, here we'll not be talking much about the mutual funds. We'll talk about direct equity investing. Like if you want to invest in equities, of course, psychologically, financially, economically, everywhere economy, investing in equities is good. It's awesome. It's beautiful. But at the same point of time, you should also be understanding that you got to be investing right companies at right price, at right time. If you can create an edge in selecting the right company, find the right time to entry at the right price, you can create wealth faster than anybody else in the world. Okay, you got to enter in a company at the right time at the right price. And to ensure that you are entering into right company at right time at right price, you need to have good knowledge, and that is what we're going to try to provide through this investing mastery series. If you are excited about that, again you can type excited in the chat box. So in the next video, we'll be talking about creating an edge, how to create edge, what type of analysis that you can do. So that's definitely going to be the next video. I hope you loved the video about why you should invest into equities and what kind of benefits that you can generate by investing into equities. See you in the next video. Again, do let me know how you are feeling after watching this video. What is your biggest takeaway after watching this video? And I'll catch you in the next video. Thank you so much. Bye-bye.